Good afternoon, everyone. Mic check.
I don't hear you.
Mic check, mic check. If you guys could please reply yes if you hear me.
More you want to?
We'll go ahead and give everyone a few more minutes to join us here this afternoon before we'll get started. Hey, Scott, Henry, Peter, Mark, you should be able to hear me. Bob, Doug, good afternoon, guys. Hey, Alan. If anyone's having any sort of difficulty hearing anything with the audio, there should be a little button or option at the top of the webinar screen. It allows you to reconnect. Just go ahead and click on that. Okay. Good afternoon. Steve, you should be able to see in front of you on the screen special live presentation. And we'll give it one more minute here before we get started. Tim, you should be able to hear me. Good afternoon. Shane, Marvin, everyone, welcome. Art.
Got it.
All right, guys and gals. Good afternoon. Welcome, everyone. This afternoon, guys, we're going to be talking about how to trade stocks and options to take advantage of the market going into 2018. Welcome to the webinar here today. We're going to go ahead and get started. We've got some phenomenal content for the webinar for all of you today on how to trade stocks and options to take advantage of the market here, closing out on a record year 2017 and going into 2018, how you can position yourself for potential tremendous opportunity. The webinar will be with two of our very own, Charles Moon and Scott Bauer. So we'll start off with some introductions. Introducing myself, my name is Mo Chigini. I'm the Senior Managing Advisor of our Stocks and Options Division here at Trading Advantage. For those of you who don't know me or who haven't had an opportunity to work with me in the past, it's a pleasure to have all of you here today. Good afternoon, Marina. So we are broadcasting, folks, from Trading Advantage Studios here downtown in Chicago. We are here downtown in the heart of the financial district. I've got our senior equities and options trading coaches with us. We'll start off with Charles Moon. You should be able to see his image there in the background, and you'll get him live here in just a moment. Many of you may have seen Charlie recently on Fox Business or BNN some of the major financial news outlets that our traders are recently featured on. If you haven't, definitely suggest, guys, you go to YouTube, type in Trading Advantage, subscribe to our channel. Now, Charlie's story is pretty unique. He doesn't have a fancy finance degree. In fact, if you're newer to trading the markets, many of you were just like Charlie a little over 11, 12 years ago. He was a professional poker player, also a small business owner, and through some friends that were traders at a proprietary trading firm called Great Point Capital, a well-backed firm here in Chicago, which was actually started by NASDAQ and New York Stock Exchange floor traders. He was able to get introduced in the game. Understanding where the big money and what they're doing is his expertise. He quickly rose through the ranks, was sought out by Trading Advantage, and he heads up our stocks trading room since 2012. Now, Charlie works with a lot of our stocks traders here at Trading Advantage on a daily basis in our live trading rooms, which, by the way, last year, our live trading rooms got awarded and voted by traders as the #1 live trading room in 2016 by TraderPlanet.com. We also have our very own Scott Bauer. So on to Scott. Scott's a 25-plus year market veteran. He began and started his trading career down on the Chicago Board of Options Exchange in 1991 in the Coca-Cola and Bank of America pits. Along with 4 partners, guys, he founded a trading firm and grew it to 100-plus traders. He was the market maker for Amazon.com, and Scott's also had the honor of working for Goldman Sachs and Company for as their vice president for their equities division. So let's go ahead and get right into the content of today's webinar. Before I pass the baton here, go ahead and show our simple risk disclosure. We've got a lot of exciting content, so I'm going to invite our traders up here to take it over. Scott?
Hey, thank you very much, Mo. Appreciate that. And this is Scott Bauer. Charlie will be on in a moment here. Hopefully you can see me. Well, maybe not. You might want to just kind of blank me out there, but should be able to see me down there. Here's what you're going to learn today, guys. And as far as I know, and I scour the internet, obviously I scour other education companies out there. This is the first time really that you'll be able to combine someone with the expertise in the stocks area with someone with the expertise in the options area to take advantage of both curriculum. Whether you want to trade stocks, whether you want to trade options, whether you want to trade a combination, Charlie and I are going to show you some of the best strategies to do that. Okay, so we're going to show you stock and options strategies, take advantage of the market going into 2018. Okay, we're going to show you how to know options, no pun intended, when trading the market. Okay, we're going to show you how to trade Charlie's directional stock signals, which he's going to go through by using options as well. We'll show you how to generate income to protect a stock position by writing covered calls and doing credit spreads in the option complex. And then we're also going to touch on very briefly what you can and cannot do in your IRA accounts. Can you trade stocks and options, and how? What strategies can you use? All right, so with that, I'm turning it over to Charlie Moon, and here we go.
Hello, everyone. Thanks for attending. We're going to touch up on a stock called Overstock. Some of you that have been paying attention to basically the news outlets have heard about the maniacal buying and desire to be long in Bitcoin. Well, we clearly, since I work with equities, can't trade Bitcoin outright. I wanted to take advantage in some way or another in the huge responsive sentiment, the huge responsive buying that's been taking place in crypto. Overstock is one of the more popular names. Another is SQ or Square Inc. But Overstock presented a great opportunity. In this slide, you could clearly see, I have it highlighted right here in this ellipse. Okay, it's gonna be green. Have that arrow pointing out right there. It is one of our tactical entry points. It was a swing play that I wanted to get in. Now I took this variation because I didn't want to have to allocate a ton of risk for the reward. I wanted a more favorable reward to risk opportunity. I was looking for an immediate response, and really I was just trying to buy the dip in a momentum name, and clearly we got in at the right point. Now with aftermarket trading, there was a little bit of heat, but overall within 2-3 days, Overstock was nearly a 10-point winner for us. Again, it was a swing play that we had available in a particular name that I had a strong affinity for, and everybody's talking about it now in the news because now Overstock is looking to actually sell their company to back a blockchain. That's really what they want to do. They want to become a quote-unquote blockchain company, no longer an e-commerce company. Well, you know, again, with the huge responsive buying that's gone on in Overstock, especially over the last few months, this was a prime opportunity and a lower risk, higher reward scenario with the uptrend and momentum clearly in our favor, and we were able to take on that particular opportunity. Now, what Scott is going to do right after is that he is going to explain, let me just erase this out of the way, his signal. But when you take a look here, these were the 2 emails that Scott and I had sent out on Overstock. Buy at 52.83, the swing hull entry, the risk parameter was at 50.70, and sure enough, boom, it exploded for us. Scott, if you want to explain your call spread.
Absolutely. So again, Charlie and I work very, very closely together. We don't always have the same methodologies, but when we do, and when we both identify an entry point for a particular stock, he sends out his signal to buy or sell a stock. If the option complex sets up where there's enough open interest, meaning there's enough liquidity, and I have the same exact sentiment that Charlie does, I'll send out an option signal. So whether you are a stock trader, an option trader, or a combination, you can take advantage of both signals. So as Charlie said, you can see on the screen his signal that went out to buy Overstock 52.83. At the same time, I sent out my signal to buy the December 15th expiration call spread, which actually expired just last week, the 60-65 call spread. Okay. What you'll note on here are a few things. What the call spread is, the price to pay. So in this instance, it was pay $1 or less, and also a contingency, just like what Charlie has. My contingency was to buy this with the stock trading 52.25 or higher. Okay. So in option world here, the maximum I could lose on this spread was what I paid for my option spread, a debit of $1. That was my risk. My upside, or my potential reward, was the difference between the 2 strikes. So long a 60 strike call, short a 65 strike call, the maximum value of this spread could go to $5. The reason that we chose these strikes was all based on what the options told us the expected move in Overstock was going to be up until this expiration date of December 15th. And at that time, the options were suggesting a move of about $12 or so. Okay. Now that's something we can go into at a different time. And that's something that I review in the class every single day, is how to look at option pricing to determine what the expected move is in a particular stock. But once we saw that that expected move was about $12, that set up this perfect call spread. 60, 65, $1 risk, $5 maximum reward. Okay, let me get on to the next slide here. So what happened was, while we're getting to the next slide here, we did buy that for $1.25 just 4 days later. So we bought that on November 17th. 4 days later, the stock was trading up at $60.45. So went up about $8. Okay. We sold the spread for almost $2. So we just about doubled our money in a couple of trading days. Now, why didn't we wait until the stock went all the way up to 65? Well, because risk management, reward to risk. We doubled our money in just a couple of trading days. So my conservative philosophy is take the money off. There's always going to be another trade to make, and allocate it to the next signal. Okay? All right. Charlie, let's move on to the next strategy. And what we're going to talk about here is a signal Charlie sent out to get long a particular stock, Ralph Lauren, RL, in this case. And what I'm going to show you guys is, rather than creating an option signal to take the same directional move, I'm going to show you how you can increase the profitability and hedge Charlie's long stock position using options. Charlie, have at it.
Thanks, Scott. So just a quick and simple explanation for our stocks program. We're directional traders, meaning I only like to trade within the trend. I do not try to pick tops and bottoms. I am not contrarian. I don't believe in that. There's been a saying, if you're ever lost in the ocean, your best chance of survival from not drowning is to swim with the current as opposed to against the current. It's the same thinking in regards to your money. Trade with the big money, not against it, okay? If you're able to pick tops and bottoms consistently, there's absolutely no reason for you to be in this webinar. Clearly, you are a greater trader than pretty much 99.9% of this entire world. What I wanted out of Ralph Lauren was to buy within the trend. Now, moving into Q4, especially as we wrapped up into the holiday season, I had a strong affinity for retail names and consumer discretionary names. Now, if you're a part of the program, you'll actually see how heavy the portfolio was in retail names, and Ralph Lauren was one of them. Now, we did exit. We exited on this particular bar, but that was before we caught a massive run-up. We actually got into a signal called the inside bar. The inside bar, in essence, is basically a coil and then a breakout type of move. We saw how fast Ralph Lauren had swung off these highs and then bottomed out. And then, of course, we saw a little bit of a reactionary behavior, a coil condense. We've had 2 days of higher highs, higher lows. We got our trigger point, and then boom, we've had a range extension, or the continuation of the buy trend, a higher high. Once we saw this particular behavior and it settled out on this level, I had to get in. The reward to risk was incredible. That plays a major part in our methodology. If you think about it, if your reward to risk scenario is 4 to 1, in essence, you only have to be right 1 out of 4 times for that particular trade signal to be worth it. Meaning you only have to be correct 25% of the time. We call it pot odds. 25% of the time for you to be break even. Whereas if you had an inverse reward to risk ratio, you have to be correct 75% of the time just for you to be break even. We're human. We make mistakes. We're not always going to get on the right side. But in that scenario, if you're a 50-50 trader, you're going to be profitable with that trade 100 times over. So in this particular name, in this particular signal, and this opportunity, it led to a beautiful buy signal And of course, the residual effect is that we started climbing and then breaking out and then extending. And in terms of setup, it was absolutely perfect. This was the actual signal that we had sent out. It is a trigger-based signal. We are not just blindly buying. We actually need validation of this particular signal. We need certain mechanics to come into play, because with all the back testing, the historical values that we've had with this particular signal, we found this is what allowed us to be the most successful. So you can see, again, the email was sent out to our clients. It was 87.56 with a buy stop order, inside bar entry. It's only valid if the trigger the trigger price had printed. The risk allocation was at 83.66. If I go to the previous screen, our upside was towards 97, but clearly we had hit that $100 mark. Again, with expectations, if we are buying within the trend, we're expecting range extension. We're expecting higher highs here. Once the signal was compiled, it was absolutely as good as it could have been for us. And again, this wasn't far out. This signal actually took place within the last 30 days, ladies and gentlemen. So what Scott's going to do really quickly is explain how, if you were to go long in the equities, you could have hedged this out with your cover calls.
Exactly, Charlie. Thanks. And, this was a great setup for Charlie. Again, we work very closely together. At the time that he had put this signal out, my methodologies, I didn't really see that same upside. I didn't look at anything and say, God, the stock's not going down. But just for whatever reason, the reward to risk for the option setups wasn't the appropriate reward to risk of what we like to follow. So many times, Charlie's students will say, hey, how can we hedge this a little bit? Or can you ask Scott, how can we trade options against this position? So what I looked at the time that Charlie and his students bought the stock here at 87.5, and I'm going to bring in a different chart here for a second. Okay, can you guys all see this chart that has just a ton of numbers on it right now? All right, now you should be able to see that. I am technically very challenged, everyone. So if you ever listen to me in one of our classrooms or follow a signal or see me on TV, my advice is great, but I am very technically challenged. So sorry about that. So at the time, stock was 87.5. The expected move again, which we will go into at another time, something we talk about in the options class every day. The expected move in Ralph Lauren, RL, out to the January expiration at the time was about $9, which coincides right with what Charlie said his target exit was, right at about $97. So what I did is I looked at, okay, the January options. I looked at the 95 strike call, which was right about that range of the expected move and also very, very close to what Charlie's target exit was. And at the time, back on, what was this, Charlie? November 11th, I think that you bought, or November 10th that you bought this here. Those calls, the January 95 calls, which on our charts that we use are right here in the middle. At the time, those were trading $1.25. So if someone had bought stock on Charlie's recommendation at 87.5-ish, 87.56, you could sell the January 95 call option for $1.25. Now, for those of you that don't know this, every option is the equivalent of 100 shares of stock. Okay? Every option, call or put, lets you control 100 shares of stock. So if you had bought 100 shares of stock, you would want to sell one call option. That option at $1.25 is really $125 because it's the option price times the 100. So what I did there was tell people that had bought the stock, if they want to hedge themselves going out to January expiration, basically what you are doing is selling stock at $95 and collecting $1.25 to do that. Okay. In addition to that, let's say the stock didn't rally all the way up there. Let's say the stock only rallied to 92, 93, 94, whatever it is. Well, you're going to get the stock appreciation from the buy on Charlie signal. And by January expiration, if the stock wasn't 95, that call option that you sold for $1.25 is going to whittle away down to zero. Now let's talk about a worst case scenario, because like Charlie said, we don't always make the right, opinion. We don't always make the right calls here. Let's say the stock didn't go up at all. Okay. You had bought it at 87.56, kind of hovered around, maybe even went down a little bit. By selling that upside call against a stock position, what that in effect does is lower the price that you bought your stock. So instead of the 87.56, if you calculate in the $1.25 that I collected for this call option, then you can look at it and say, you know what? I've got $1.25 of my risk to the downside covered. My theoretical entry point then to the stock that I bought is really 86.35-ish. Okay? So again, Charlie and I work hand in hand. We don't always agree on our signals. He's got his methodology. I have my methodology, but we work hand in hand to enhance each other's signals. And we give our students the opportunity, if they're more comfortable trading stocks, great, go ahead and trade stocks. If they're more comfortable trading options, go ahead and trade options. We give you the opportunity to do both. All right, Charlie, anything you want to wrap up on this particular trade?
Not at all.
Okay. So because I'm technically challenged again, let me figure out how to get this off of the screen here. Hang with me here, guys, because technically challenged here. Charlie, come on in and help me out, please. There we go. Coming up. Perfect. Okay. Awesome. We are going to have a Q&A session at the end here. Okay, so just hold your questions. I see there's a bunch of questions coming in here. Hold your questions. We will absolutely answer these in just a couple minutes. So we get a lot of questions daily. Okay, I can't trade this particular spread in my IRA. I want to do something in my IRA. I want to take care of the tax, take advantage of the tax benefits. So what can't you do? Okay, this is just going to be a very quick overview, a very quick primer, but it's something we talk about in our classes. So what can you do in an IRA account? Okay, so first off, every trade you make has to have defined risk or be secured with cash. Okay, meaning that in the stocks world, you cannot just sell stock or short stock in your IRA, but you can trade ETFs that are double or ultra short or other securities that replicate stocks. Okay, there is no margin trading in an IRA account. Okay, well, what benefit does that have then? What can I do in my IRA account? Well, you can sell a put if it is cash secured. Okay, now what does that mean? What does a cash secured put mean? Well, let's say I have a $15 stock, okay, and I want to sell a put because in the option world, if I sell a put, I'm collecting some premium, but I'm really taking the opportunity, or I'm looking at that stock as saying it's either not going down any further or it's going to go up and I'm going to collect all that premium. Okay, but a question for everybody here. If you have a $15 stock, what is the downside? What is the downside to that stock? Meaning, if you own the stock, how much can you lose? Or if you've sold a put, what is the maximum value that a $15 put can go to? Anybody? This is a question you guys can start answering. There we go. There's some answers. Yep, that is correct. Yep. Okay, good. Good. So to the downside, the worst case scenario for a stock or an option is that the stock goes to zero, right? Can't go less than zero. So if you have a $15 strike put, the maximum value that put could be is $15. Or remember, $15 per option is really the equivalent notionally of $1,500. So I can sell that put in my IRA if I want, as long as I secure it with $1,500. That would be what's called cash secure, or a cash secured sale of a put. Okay? Everybody understand that? Now let's look at the upside. Instead of looking at puts, what can you do with calls in your IRA? Well, if you sell a call to someone, theoretically, what is the maximum value? What is the maximum value that a call option can theoretically go to? Okay, obviously it all depends on where the stock goes. So, okay, I see some answers coming through here. So unlike a put where the stock can only go to zero on the downside, okay, on the upside, a call theoretically has unlimited upside, right? A stock can go to 1 million. Look at some of these stocks over the last few days that have, like Charlie alluded to earlier, that have blockchain or Bitcoin associated with it. These stocks are just flying. These call options can theoretically have unlimited upside. So you can never sell a call in your IRA unless it is secured by owning the underlying stock. So if you're already long stock in your IRA, then you can have a strategy and increase your income by selling calls against it. Okay, so in your IRA, there's level 1, level 2, level 3 option strategies. Level 1 is the easiest. That's the covered call strategy we just talked about. Level 2, okay, is by either buying a call, trading puts, selling puts that are cash secured, having enough cash in your account to cover that risk, because your risk is always defined when you buy an option. Okay, when you buy an option, your risk is defined by the amount that you pay for that option. So your risk is defined. And then a level 3 strategy in an IRA account is a spread trade that has defined risk profiles, much like the example that we used earlier in Overstock, where there was a 60-65 strike call spread. The risk was defined because you were long out one option, short the other option. Okay, so these are the types of things that you will learn and we discuss in Charlie and my classes to help you guys out. So just when, thinking about perhaps trading in your IRA, a couple really important things just to consider is every broker has their own limits to which strategies they will allow you to use. So check with your broker ahead of time which one they'll approve or how many of them they will approve. Okay, covered call strategy, that's the lowest risk. Okay, and then very important, losses in your IRA accounts cannot be used, as tax deductions. Okay, everybody with me? Okay, we're going to open this up now to Q&A. I know there were a bunch of questions that came through here. Charlie and I, hang on. Before we do that, Mo is going to come in and talk to you guys for a second, and then Charlie and I are going to answer your questions.
Thank you, Scott. Good afternoon, guys and gals. Real quick, before we address some of the questions here today, wanted to go over a few things. First and foremost, both Scott and Charlie covered a ton of content. They demonstrated well what we do on a day-to-day basis. I know a lot of you may be interested in what we offer, what you heard today, and would like to learn more. We will be offering a webinar exclusive promotion, which will be something we're super excited about, never done before. We're going to be including access to both Charlie and Scott's signal rooms. Charlie and Scott, on a week-to-week basis, Monday through Friday, market open to market close, are dissecting and analyzing the market live. They are demonstrating our methodologies live, our trading plans live, and calling out signals, which we do email all of our members as well. So for many of you who are retired, don't want to be in front of a computer screen for hours on end, work 9-to-5 jobs, would like to participate in the market, have education and training available to you on demand, you can follow along with our trade signals and still participate in the program, in the market, and receive value. We've had a record-breaking year this year, and we're excited to welcome all of you to learn more about what we do on a day-to-day. Call my team here. They're available now. The number is 888-755-3846. It'll be on the screen here next. But above and beyond the 24/7 on-demand access to our education, the live signal rooms offer the Monday through Friday market open to market close analysis of the market, as well as the emailed signals that come over to your inbox. Above and beyond what we're offering with both Scott and Charlie's signal rooms is a group and private mentorship exclusive with the promo code 2018 trade, as you see on the screen. If you call in now, we're doing a full year's worth of both small group and one-on-one personal mentorship training packages with both Scott and Charlie together. The syllabus can be explained to you if you're interested. It's basically a 6-week course broken up into 2 separate 3-week and 3-week training sessions once a week, where both Scott and Charlie will be going over the topics they discussed here with you guys today. We'll be going over some of the signals that we use on a day-to-day. And after that 6 weeks is completed, you get a full year's worth of follow-up with the both of them. So we're offering end-of-the-year pricing. We've never offered that dual mentorship program before. It's our stocks and options exclusive mentorship program. Call in. Many of you are members and can attest to both of their expertise on a day-to-day. And if you'd like a little bit more information on the methodology, perhaps you'd like to know a little bit more about that overstock.com signal that we had up, or perhaps the Ralph Lauren signal, would like to see some of the other signals that we've included for the year, please call in. We're more than happy to help. Once again, the number is there, 888-755-3846. I'll open up the floor to the Q&A. And I insist, guys, you all give us a call. We'd love to work with you. Charlie?
All right, ladies and gentlemen.
Charlie, should I get on my step stool here? All right, let's. Here's a good one, and we're only going to touch on this really quickly. What defines a blockchain company, and what do they spend time doing? You know what? Nobody knows, but I think Vay, that is your name. A blockchain company right now, many companies out there, like what we're seeing in the news, are adding blockchain, adding Bitcoin to the name of their companies just to see basically a bogus increase in the rise of their stock prices. Okay, so typical blockchain companies before it became the mainstream here are companies that actually would invest in miners, invest in people working on the blockchain, which for those of you that don't know what blockchain is, don't know what the crypto space is all about, a blockchain is really like a Microsoft Excel spreadsheet. It keeps a log of transactions. Okay, now that will be something we discuss. Okay, we are working on a crypto space right now. As you all know, Bitcoin futures trade both on the CBOE and the CME right now. They'll be launched on the NASDAQ shortly. And sooner rather than later, there will be crypto options trading, whether it's based solely off of Bitcoin or whether it's based off an ETF. There will be options, and we will be trading those. Okay, what else we have here?
Fire away some questions, ladies and gentlemen. Just to kind of touch up on some of these names. LFIN, they had the CEO on CNBC. What an interview that was. Feel free to look it up. But this was a IPO that came out at $5 last week. And within a few days, they had hit over $140, all because of the assimilation with blockchain. Riot is another one. Riot actually just transitioned their name into Riot Blockchain. But upon release, and basically since up to September, they were known as Riot Pharma. They were a biotech company. And they put the blockchain name, and they basically went from $6 to $40-some. One of the most popular names that you'll find out there is SQ, or Square Inc., a payment processor that is basically accepting Bitcoin just like Overstock is. And that led to a significant run in the stock price here over this calendar year. So that in essence is what we have seen in regards to blockchain names and the furious run of buying in some of these names. Now, in the stocks program, I generally focus on larger cap names. I like stocks that are liquid. They're a little bit more quote unquote predictable because the big money is there to either offer up resistance or support or to push the particular stock price. When you trade in a stock that has fairly light liquidity and then all of a sudden there's a rush of buying and or selling and it goes against you, it's going to cause a significant swing. And so due to that crazy volatility, I generally don't have interest in smaller caps. I usually like to play in the larger caps here.
Charlie, here you go. Here's one. How do you determine which stock strategy to use? I'm going to throw that to you.
Yeah, that's a great question. So I usually have a list around 100 to 150 names that I'm looking at maybe once or twice a week. And I whittle those names down to about maybe 10 to 15 to start the week. I have a watch list that I just compile and keep on my own. And most of the time, it takes about 3 to 5 days, trading days, for the actual setup to occur. And if everything works out properly in context of the overall markets, I'll be more than happy to take it. The inside bar, I run a scanner every night. Scott and I both look at the scan list, and we'll kind of go through the list and see, what would be at least worthwhile in consideration. But majority of the time, just because we have the setup doesn't mean we're going to take it. We just want to make sure everything is proper.
And let me just build on that a little bit. Something you just said, Charlie, is extremely important. Quality is way more important than quantity. Okay. So, lots of students will hear, we'll get some feedback. We need more signals. We need more signals. Well, we send the signals out when they meet a very, very strict regimen of items on our checklist or our surveillance list. So the quality over the signals is way more important than the quantity of the signals.
Hey, Manny, how's it going, man? It's been a while. What trading platform? So this is currently eSignal. We have a licensing deal with eSignal. A lot of our clients use Thinkorswim. The methodology was developed on Thinkorswim. I believe Scott uses LiveVol, also in conjunction with eSignal. In terms of program costs, call in, talk to Mo, see if they can make a deal. Will cryptos hype up any other stocks? We just kind of touched up on that. 100%, 100,000%. If there's
Daily.
any kind of assimilation, I'm not kidding you when we say we see significant jumps. One stock is frozen right now. I believe it's CRCW. They believe they went from $4 to $500, $600.
Yeah, and the SEC froze them.
Frozen till Jan. So if your money's stuck in there, you are in trouble.
Okay, now wait, go back there. Someone had a question regarding IRAs. Tagur, hopefully I'm pronouncing your name correctly. The question was, in an IRA account, am I allowed to buy and sell stocks or not? Okay, you cannot sell stock short. Okay, so let's say you think that this Riot blockchain is way overbought, it's bogus, you want to sell it, you cannot sell that in your IRA. You can buy it, you cannot sell stock short in an IRA. Okay, all right. Crypto, should we buy the CME stock or options because of crypto futures? As of right now, the bottom line is these futures are not trading a ton at the CME and at the CBOE. They're not trading a ton right now. Do I think that as the space matures and as people get, a little bit more comfortable trading these futures and they have the ability to actually short them, I think that volume will pick up. And that's where both the CME and the CBOE will make their money, is on volume. Right now, there's not a ton of volume, so I wouldn't make a decision to buy or sell CBOE or CME stock based on just the Bitcoin futures. Hopefully that makes sense.
Chris asks, what is the percentage of your success rate with the signals hitting the target upswings? I don't compile that particular number. Generally speaking, if we're long in a bull market, our expectations is that it's going to be 100 out of 100%. Of course, that is not ever going to happen. I believe that my success rate is a lot better than it was in other years. I don't have a definitive target. I'm always looking for 5 and 10% of the stock price, and then all you can eat. So I do manage the signals. I take off partial profits. I don't ignore resistance, but however, if the stock is bullish and the sentiment in the market is bullish, I'm going to try and squeeze out as much as I can. Overall, the most important aspect, Chris, is that whether we're hitting these targets at a 50% clip or 25% clip, the reward to risk is going to define if we're a profitable trader or not. And that's the most important aspect. The truth of the matter is, with the market conditions, your expectations should be higher in regards to hitting these levels more consistently than opposed to a bear market.
Marshall, how many trades do we typically make in a week? Well, in the options room, a lot of it depends on the cycle of the year, meaning are we in earnings season when typically there's more volatility, more opportunity, or is it kind of a lull? I would say on average, there's probably 8 to 10 signals that go out a week. Doesn't mean we get filled on all of them, but probably 8 to 10 a week. Now, that may not sound sexy, okay, because everybody wants to trade, everybody wants to be in and out and in and out. the bottom line, like I said before, it's quality over quantity. And if you look at the track record, it speaks for itself.
Yeah, with stocks program, it's actually a little bit more limited. It just depends on how much room I have for my portfolio. I only allocate 2% risk of the total portfolio to any given trade, no more than 8% total risk parameters for the month. So in essence, depending on what the stop is, how much we've taken off, we could be holding anywhere from 4 to 10 signals at one given time. If I'm pretty full and I have a full boat on, I'm not going to sit here and expect to take on any more. But the beauty of what we do here, what Scott and I do, is that not only can you take advantage of our success, but you actually learn. You learn from two educators that are teaching you in real time how to do this on your own so that you have the ability to exceed our results and do much better if you actually see that opportunity. You don't have to be relying on us. That's not what we want. We actually want to teach you to be better than us. And that's the most important aspect here.
No question about it. And you're getting in Charlie and I, you're getting two educators that have been there, two educators that have actually traded on the floor, not just reading books, learning up on options, understanding Black-Scholes model. So what we bring to the table is not just the theory, but real trading expectations. And there's a big, big difference between learning how to trade in real life and how to trade by the book.
That's true. That is true. Grant asked about, what do I think of the green rush? Well, I'll say this right now. As long as Trump is in office and Jeff Sessions is the attorney general, I don't think much of him, because Jeff Sessions is actually trying to delegalize. He does not want marijuana to be legal anymore. And that, in essence, is very bad for U.S.-based marijuana stocks. Now, Canadian-based marijuana stocks, there's a huge rush. Justin Trudeau, the Prime Minister of Canada, just spoke on it. We saw a big lift in a lot of these Canadian marijuana names. So, I was saying in the room today, get high, right? Literally get high in terms of the stock price. He's kind of given that go-ahead. We're seeing the rush in Canada. We're seeing the demand. And, of course, the sales are backing that up. If it's a U.S.-based company, I'm more hands-off. If it's a Canadian-based company, I'm more hands-on.
Charlie, you want to take the chart off here so we can get to that last page there? Because someone's saying here, good webinar, thank you very much. You don't see the name of our organization or website, phone number, this, that, and the other. That's because we have the stock chart up right now. Let's get to the slide where you need that, Kent. And there we go. Okay. Hopefully that helps you. All right, we got time for a couple more questions here.
Nobody asked about Amazon or Apple. Everybody's happy because they're just holding.
Exactly. Here's one. Scott, what kind of risk reward do you take? Charlie talked about his risk reward. What do you take? Typically, nice, Bob Lilly. Nice comment there. Typically, we look for in a debit spread, meaning a spread, an option spread, where we are paying for that spread. We'll look for somewhere between 2.5 and 3 to 1 reward to risk. Okay. Remember, our spreads in the option room, always risk defined. We know with every signal that goes out what our risk is. It is predefined, and we measure the reward to risk based on the amount of debit, the amount of credit, and the likelihood of a potential move to a certain strike. Do we do things like the QQQ? Yes, we absolutely trade options in the ETFs. SPY, Qs, IWM, absolutely, James.
No, Manny, just equities. Yeah, so I hope you guys understand this. We're not investment advisors. I'm not telling you to put your money into anything and have it parked and then worry about it, in 2020. I want you to take active control of your portfolio. We never know. Imagine the people that are holding in CMG at the 600 level, 500 level. What about VRX? People are holding at the 180s or 110s. We don't want you to be in that particular position. Give a damn about your money and take control. I don't know. I believe the options program is doing exceptionally well. With the equities program, this is our best year yet. Trading large caps, we have knocked it out of the park. I'm pretty sure Scott has done the exact same thing. If you take just a little bit of time to glance over your portfolio, recognize where your risk thresholds are, and actively manage it, not micromanage it, just actively manage it, meaning give a damn. You can do wonders. If you're happy with your 4%, 9%, 11% returns, then you are at the wrong webinar. We're trying to exceed those numbers 5, 6, 7, 8, 9-fold in one calendar year. Do I trade a stock that's at 52-week highs? That's a great question. So Scott has that ability to get his reward to risk ratio in that light. My reward to risk ratio obviously will be lessened. I try to never buy stocks at the highs, regardless of breakouts, regardless of market behavior, stock behavior. I would much prefer to buy the dip and trade up into that level with expectations of extending and making a new 52-week high as opposed to buying those highs, because historically, okay, maybe not this year, but historically, those are the levels of reference where we see risk-off trading. We see profit-taking take place. So I try to avoid that as much as possible.
What type of spreads do we trade? Yes, we trade weeklies, which are extremely, extremely liquid. We trade monthlies, okay? We are not locked in to just a single type of strategy, okay? Anyone that's been in my room will see that we trade long spreads, short spreads, bullish, bearish, neutral. We take advantage of what the market and the option market has to offer. We are just not locked in to one certain strategy.
Yeah, so Bay, you asked what these bars are. These bars are representing one full trading day in the markets. These are daily bars, or this is a daily chart. Generally speaking, if I shrink it down, it will expand over the full 52 calendar year. I like to take on a little bit more longer term positions with less hands-on opportunities. My swing trades will average out, the signals will average out anywhere from 3 to 4 trading days in terms of historically holding. The trend signals will be somewhere around 17 to 20 trading days in terms of holding. So that equates out to 1 week or 1 month. So you can see I'm not actively in and out, in and out, in and out. When you get involved in our programs, what we're going to teach you is a full gamut, not just the methodologies, but technical analysis on how to recognize true reward to risk ratios, how to understand chart patterns, how to recognize and understand institutional buying and selling, how to actively participate and take advantage of this opportunity. Smart buys, smart sells.
Remember, Charlie said this a little while ago. We are traders, we're not investors, right? So our time horizon is not months or years. We want to take advantage of what the market has to offer now, okay? So I know in the options room, our typical signal lasts maybe 3 to 5 days, right? We are traders, we are not investors. And yes, to the person that just went off the screen here, we do trade iron condors all the time. In fact, last week we had a phenomenal one on Adobe. All right, guys, we have time for one more, and then we're going to wrap this up. Charlie, you want to put that slide back up?
Sure.
Back up there.
So Tony asked a great question. Is it okay to take one side of a particular signal?
So Tony, I'm going to answer that first on the option side. 97, 98% of the time, we trade spreads. And we do that so we can manage our risk more efficiently. Okay? We will never, when I say never, that's 100% of the time, we will never just sell a naked option. Very, very infrequently, we will buy an option because we know what our risk is. We know what that defined risk is. But if we sell an option, we have undefined risk, at least on the call side. On the put side, like we talked about earlier, stock can only go to 0. We will never just short an option. We may be short a spread, but we know what that defined risk is.
Now, I will say, because I trade larger cap stocks and higher price stock names, a lot of the clients, to get the leverage, will take one-sided option plays, or they'll reference with Scott and look on to take on a put spread or a call spread directionally in regards to our particular signal.
Okay.
Fab, great question. That the best that you can do is call on in and find out what would be best for you.
All right. Mo,
Thanks, guys.
Step on back in here. Everybody, before I turn this over to Mo, Charlie and I and Mo and the rest of the staff here at Trading Advantage want to wish all of you and your families happy, healthy holiday season. Happy New Year. Great trading ahead coming up. 2017 is ending with a bang. 2018 should start the same way.
You got that right.
Okay, so happy and healthy holidays to everyone. Here's Mo.
Thank you, guys. Excellent. Well said, guys. Scott nailed it right on the head. 2017 ending on a bang. We're going into 2018 with a lot of exciting things on the horizon. As you all know, the cryptocurrencies are the talk on the media. Everyone is discussing the cryptocurrencies, Bitcoin, where to be. There's nowhere better to be than here at Trading Advantage with Scott Bauer down on the floor of the Chicago Board of Options Exchange, the first place to introduce that futures contract. The CME just launched it. We're here at the helm. If you want to learn about the markets, you need to call the professionals here in Chicago, headquartered in the financial district. We've been doing this for a very long time, guys. I definitely insist, if you liked what you heard, if you want to know how to play market direction with options, if you'd like to know what you can and can't do out of your retirement account, this specific mentorship program that we are offering, we've never done this before, okay? This mentorship program that offers both stocks and options, methodology, as well as certain strategies to use within your retirement account, how to protect and hedge some of your stock positions in the market going into a brand new fiscal year here in 2018. 6 weeks of intensive training. We've got a syllabus. I've got a syllabus here of topics discussed, how to determine trends and momentum, position and swing trade signals in the market, going over how to identify these stock opportunities, and then how to use options to maximize the leverage that they afford, how to reduce your exposure, how to hedge your positions. If you guys want to learn more about the dual mentorship, both personal one-on-one training sessions being offered, as well as small groups being offered at a little bit of a lesser rate, promo code 2018. Call now. We've never done this before. 888-755-3846. I've got end of the year pricing available. Hands down, some of our most aggressive holiday pricing the company's ever seen. We'd love to work with you. Happy holidays from Trading Advantage to all your families and to you guys. Thank you for joining us here today.